This is one of the best performing stocks on the entire market over the past 5 years, beating out returns from SMCI and GameStop and coming just behind the monster AI giant Nvidia for 4th place at 2,400% return.
Wow!
Cassava, in my opinion, is the most polarized stock on the entire market. I mean, just check out the options pricing and short interest. It's actually insane. For reference, Cassava's implied volatility is over 300%. For comparison, GameStop's IV is 90% and Tesla's IV is 55%. If successful, they'll have the first ever safe and effective drug to treat Alzheimer's, which I can't stress enough how big of a deal this would be. This is one of the few stocks where a 4-figure percentage return with options is actually in the cards. That said, after following this company for 3 years, I remain bearish on the stock, but I am positioned long going into the data readout in a few months.
Are you high, bro? That literally doesn't make sense.
Actually, it does. I'll explain. Here's a teaser.
So, and there's a difference between making a bet where you get paid $1 and making a bet where you get paid a lot. And in Fool by Randoms, I explained that difference by saying that I was bullish, all right, the market, but I was short. How? Well, I was bullish in the sense, what do you mean by bullish? I think the market had higher probability of going up, but it's the expectation of being short is bigger. So these things, don't translate well outside option trading, and of course, these guys don't get it.
I'm regarded, and this is not financial advice. Recently, Shkreli came into the scene, which I definitely did not expect, and certainly didn't have on my bingo card. He's been very public about his conviction and short position on the stock. Full disclosure, I actually have a lot of respect for Shkreli. I've listened to a number of his streams outside of Cassava. He's spending a ton of time sharing his thoughts and insights and is genuinely trying to help people, which I think is really admirable. Obviously a very polarizing figure to say the least, but the world isn't always so black and white. Anyway, I digress. Personally just bugged me seeing some Cassava bulls bringing up his past as a counter-argument instead of addressing the points that were brought up on Cassava. After all, he's got a ton of biotech experience, certainly way more than me, so I'll shut up and listen with an open mind, but you do you. I'm in this to make money, not to be a cheerleader with a wavering bias towards the team. With that said, let's cover some of the points that Shkreli discussed that stood out to me, and I'll share my thoughts on them. Number 1, nothing personal about the position, whether someone's long or short. I completely agree. It's funny seeing some of my past videos getting mass disliked with negative comments because I brought up some points that goes against the typical bull narrative. It doesn't bug me, just an interesting observation. I mean, if I really cared about that, I'd be an 100% Uber bull. That's what people want to hear at the end of the day. Number 2, Cassava is mostly retail owned. Big biotech funds are not allocated in Cassava. They employ some of the smartest, most experienced biotech professionals. So if they're not in it, that supports the short thesis. I'll disagree that it applies universally. There's plenty of examples of biotechs pulling off disgusting returns. 2 recent examples that come to mind is Viking going from $2 to $100 in a year, and Summit going from 90 cents to $33 in under 2. These examples show that the market isn't always efficient, and especially not in the biotech space. Otherwise, the quote-unquote smart money would have backed companies like Viking and Summit way earlier, and as a result, the returns would have been significantly more muted. These are just 2 recent ones. There's plenty of other similar examples. Moreover, a biotech fund specifically mentioned by Shkreli is Baker Bros. Taking a look at one of their holdings, ATHA, which they have a 8.3% ownership over, we can see that it's down 99% since their investment in it. Point being, the smart money misses opportunities all the time, and I've seen it happen firsthand countless times as well outside of bio. And if you thought I cherry-picked that company, well, let's try another one. How about their largest position, which is in INCY? Their initial position has about tripled in 10 years. However, they've dollar cost averaged up more than double their initial position, which is down as much as 50%. Overall, still a positive return, but after adjusting for the fees and the 10 years of bull market over the same span, they've significantly underperformed the indices. Number 3. Phase 2 open label data is meaningless because it lacks double-blind placebo control. I think this is probably one of the key areas of contention for both longs and shorts. Longs see the phase 2 open label results replicating in phase 3, and the shorts clearly don't. I will agree that the lack of placebo is not ideal. I mean, even for someone like me without a bio background, the importance of placebo is pretty much drilled into us from high school science class. That said, I don't think phase 2 results should be 100% discounted. Look, I get it from a scientific perspective that it's not legit given the lack of placebo, but that's what we have phase 3 for. Personally, I think there's a chance of phase 2 open label data replicating in phase 3, and ultimately that's why I am long the stock. And number 4, data manipulation and SEC DOJ investigations. A common conspiracy that I see echoed by some bulls is that this is all a result of a big ploy by the evil shorts and big pharma against the small helpless biotech. I personally disagree and think a lot of it is self-inflicted. Now, don't get me wrong, there's certainly some interesting ties between the short side and their connections to government agencies and such. With that said, if you're going to publish important phase 2b biomarker data that would at the time potentially make or break your company, maybe don't be deceptive and say it's analyzed by an outside lab when the lab actually belonged to the inventor of the drug. That's anything but outside, literally. And maybe ensure that the lab has the proper protocols in place and that it isn't done by someone with a clear conflict of interest. Moreover, the recent SEC settlement revealed information about potential unblinding and Cassava purposefully excluding certain phase 2 data from being reported. I'll be honest, I really didn't like this because it's a trust and integrity issue and calls into question what else they fucked around with. If they messed around with the data once and weren't transparent about it, I'm going to assume it's not a one-time thing. All that said, I do have sympathy for Cassava given that they had a small team, but they really should have known better. There's no excuses for being sloppy and lacking transparency and accountability. Number 5, Remy and Lindsay suddenly leaving the company in their roles as CEO, chairman, and chief scientist, especially being so close to phase 3 data readout, is highly suspect and unusual. I agree, and the stock dumping massively on that news reflected that. Given the benefit of hindsight, we now know that they left the company as part of the SEC settlement agreement that recently concluded, so that was the reason for leaving. Number 6, just because phase 2 results are excellent doesn't mean it'll replicate in phase 3. An example that was brought up was Dimebond doing well in phase 2 Alzheimer's trial, and then subsequently going on to fail phase 3. I agree, it's certainly a risk that phase 3 may not replicate. As someone that's long, I'll accept the risk because the potential reward is just too great at the current share price, in my personal opinion. Number 7, lack of scientific research and studies backing the science of how simufilam works to treating Alzheimer's. I would push back on this. I think that given simufilam treating Alzheimer's seemed to be an accidental discovery by a small company, it's logical to me that the research and science around it is lacking. Of course, I wish there was more research and papers around it, but at the end of the day, all that matters is phase 3. In fact, as I understand, there are plenty of drugs on the market today with unknown mechanism of action. Furthermore, I think it's a bit unfair to expect a small biotech to totally figure out and explain the treatment backed by mountains of empirical studies published in reputable journals, especially in a field like Alzheimer's, where very little is known to date about the cause. I mean, don't take my word for it.
Makes total sense, but somebody from Harvard Medical School that specialized in Alzheimer's, their entire course load, their entire training, their entire focus is on accepting Alzheimer's, that it's there, that it's growing, and then figuring out marginal improvements for it. There's literally people that are the highest educated people in the world do not even understand what causes these diseases. They're just accepting that and making the cures for them, the marginal treatment.
We also know that the traditional body of work around amyloid plaque research as it relates to Alzheimer's was a total failure, as proven by the lack of safe and effective treatments available.
And so in terms of Alzheimer's, so I think a really interesting framing is that the brain, it's only 2% of our body weight, but it uses 20% of our body's energy. And there's been this theory with Alzheimer's of like, oh, it's the plaques in the brain. It's the tau and the tangles and the beta amyloid and all these things. And so we thought, okay, well, if we can get rid of those with a drug, like maybe it'll improve. But no Alzheimer's drugs really work meaningfully.
In fact, this was recently called into question as billions of funding over the years given out by the NIH were based on papers with made-up data. Does that sound ridiculous? Yeah, I know.
Over 100 NIH-funded Alzheimer's and Parkinson's research papers contain completely made-up data according to new allegations. Billions in funding and years of research now in serious doubt.
Yeah.
Anyway, all that's to say is I personally believe it's a great thing that Cassava's mechanism of action has deviated from the traditional amyloid plaque removal hypothesis, which I think by now we can conclude was a total failure. Is it risky? For sure. But worst case scenario, it's probably not much worse than the existing treatment, which we know do not work. And as for me, I applaud Cassava's willingness to at least try something new in large, well-established phase 3 studies. It's called biotech for a reason. That's what technological advancement is all about. There will always be doubt at first, despite evidence that suggests otherwise. To conclude, in my opinion, I do think the chances are greater that Cassava fails phase 3. With that said, I'm positioned via shares and highest strike out the money calls to capture the upside on the chance it succeeds and shocks the world.